Is trillion the new billion? What US company holds the value of the entire economy of Canada? What's going on with AI, inflation, and new highs? Why do thinking like an investment analyst could be as easy as planning your next vacation? Here's what happened in the markets so you can invest like the top 1%. After a week of anticipation, with the market moving sideways, awaiting economic data and earnings report, it was NVIDIA's moment. One day, they had their largest drop in market capitalization. Second day, it became one of the most valuable companies on the planet and joined the $1 trillion club. A robust quarterly report and a forward-looking vision sent the S&P 500 and NASDAQ to new highs. It was a record-breaking growth for any company in one day. This massive growth of NVIDIA makes us think AI is just starting to show its power in the economy. It's a sign that AI will play a big role in our future. The anticipation built for AI's role as a key economic driver in 2024 and beyond. Another sign that humans continue to innovate, economies continue to find new breakthroughs that increase productivity, accelerate opportunities, and expand possibilities like never before. Today, the market's attention pivots to awaiting key economic data like inflation and the Federal Reserve, crucial factors that could shape interest rates decisions and perhaps future market movements. How and why does inflation affect the markets, and how does it impact your investment portfolio? Inflation doesn't just affect the cost of living. It directly impacts investments by reducing the real rate of return or your total return. For example, if an investment yields a 6% return over a year, but inflation was 1.5%, the real return adjusts to 4.5%. Taxes can further diminish this figure. Secondly, inflation risks purchasing power, where the same amount of money buys fewer goods over time. Lastly, the Federal Reserve monitors inflation closely, adjusting monetary policies as needed to control the money supply, spending, and ultimately inflation itself. The Consumer Price Index, or CPI, is a key measure tracking these changes through detailed expenditure information from households. The CPI encompasses diverse categories like food, housing, and transportation. Despite its wide use as the main indicator of inflation, the CPI's scope and impact are subjects of debate. For instance, while the overall CPI rose 7.9% over a year, energy prices surged by over 25%. Variability within inflation metrics can be challenging. Understanding inflation is crucial for navigating the financial markets. Depending on your goals, your real rate of return has to be front and center when you make portfolio choices or rebalancing existing portfolios. As we observe shifts in the economy from stock market highs driven by AI innovations to everyday implications of inflation, staying informed helps anticipate and react to the ever-changing financial landscape. Now, a common method used by market analysts is called the top-down method. Think of top-down analysis like planning a trip. First, you decide which country you want to visit based on the weather or events happening there. That's like looking at the big picture or the overall economy to see what parts are doing well. AI, for example, and the sectors directly connected to it, like semiconductors and industrials. Next, you choose a specific city in that country because it has best attractions or activities, costs, living, similar to picking a certain industry that looks promising. Finally, you pick the best spots to visit in that city, just like selecting individual companies that seem likely to do really well, or perhaps funds that invest in similar companies. So in simple terms, top-down analysis means starting with a broad view of the whole world or the economy, narrowing down to a country, and then choosing the best place to visit in that specific country. So this will look like specific companies or specific funds. This way, the choices are made step by step, ensuring you're investing in areas that are set up for success based on current big picture. This could be applicable when you start a business, when you diversify your portfolio to other asset classes, or when you decide to purchase real estate. Remember, you don't have to do it yourself. Send me a direct message if you have questions or would like to work with an investment advisor. So the company that holds a value as big as the entire economy of Canada, it's NVIDIA. It took 3 decades to become a $1 trillion company and less than 12 months to become $2 trillion company. Now that's a wrap for this week's financial report. The economy is showing positive signs. Don't sit on the sidelines. More than 60% of the top 20 companies in the world today are US companies. More than half are worth over $1 trillion or edging close. These are all public companies, and with these companies' growth is opportunities to invest and build wealth. Tune in for Saturday's financial literacy webinar where I go deeper into concepts that help you understand these things better. I'll do this again next week. If you work in an economy, then learn to unlock the power of its financial markets so that you can transform your work into wealth.